Well, good morning and welcome back to the ROS Media channel. My name is Andy and I'm here with my good friend Ian, who is the founder and president of the Republic of Old Souls. If you're joining us on the socials, welcome. Grateful to have you with us. Let me ask you a question. Have you ever felt like you're playing a game of financial monopoly, but no matter how hard you work, no matter how much money you make, the rules seem to be rigged against you? You buy your house, you pay your taxes, you pay your bills, but you never really seem to get across that finishing line. What if the problem isn't your hard work? What if you're just playing the game or the role of that game on the board in the wrong way? Well, today we're going to break down something called the Monopoly Game Changer Protocol. This is our flagship protocol here at the Republic of Old Souls. We're going to talk about how to stop playing that game as a helpless game piece and how to really step into the role of the banker in your own life, completely legally and with a clear path to get you started as well, with potentially a zero upfront cost. So I'm really excited to dive into this, Ian. The first section that I wanted to cover today, and I think this is important just for new people coming on board, is, you know, the board itself. You use a brilliant sort of metaphor here, comparing the financial system to a giant sort of digital, virtual game of Monopoly. So for someone who's never ever heard of this before, what is this Monopoly board, and how is the average person unknowingly tying their real life energy, shall we call it, to a government created or system created game piece like the birth certificate?
Yeah, well, there's two realms. There's the realm of the real, the living men, women, the living soul, the if you could argue the consciousness, and then there is the artificial realm, the realm of commerce, which is what I call the Monopoly board. If you think of a company, you can't talk to it. It's artificial. You can have agents that represent it, like shareholders, directors, staff, but you can't actually talk to a company. Same with the government. You can't actually talk to a government. You can talk to the MPs or the senators that represent the government, but you can't talk to the government. You can't talk to anything artificial because it doesn't have a life. And what we're all doing without realizing it is that the living men and women, the living soul, is operating as an agent for the birth certificate construct, which is the player piece that operates in this artificial realm, which is actually a trust. It's a worldwide trust. And everything that's going on in commerce is all going on between artificial entities that are all represented by or being held out onto the board by the living men and women. So those are your two realms. You've got the artificial realm, just like a game of Monopoly, where you've got player pieces on the board, and then you've got the player that moves the player piece around the board. But in this game, the player, which is the living soul, the man or the woman, is liable for everything that is happening on the artificial Monopoly board. So there is a agency liability. And because the living men and women, without realizing it, are also holding themselves out as if they were the player piece, which is the birth certificate construct. It gives the control away to those that run the Monopoly board. So you've basically got an artificial construct, which is the birth certificate itself, sitting on an artificial game board with all the other artificial entities, all being moved around the board by the living souls, the living men and women, who can't step on the board because that's impossible. It's artificial. But the living men and women are responsible for everything that the player piece, the citizen, does. The straw man, the artificial birth certificate construct, that is the player piece on the Monopoly board. So if you imagine you were sitting at a Monopoly table, the table is the world. If you look at the old flat Earth map, which they like to promote, and you're sitting there, and you're basically moving the player piece around, which is the birth certificate construct, around that world board. And that world board is artificial because it's all made up of artificial player pieces, most of which are citizens, of course, because it depends on who you believe, but there's billions of citizens which are artificial constructs that have all been registered to play the game on the artificial game board. And they're all being backed up by the living soul, the living men and women acting as surety, liable for everything the player piece does on the Monopoly board. And the whole Monopoly board, extraordinarily is bankrupt. It's all bankrupt. And it's a trust. And because it's bankrupt, there are debtors playing the game. The player pieces are all debtors. And the creditors are not on the board, they're off the board, the creditors being the living men and women, the living souls. And everything on that board is operating in debt, which it doesn't appear that way because you don't get a minus sign, in front of or before the numbers in your bank account or your pension statement or your investment portfolio. It doesn't say minus and then a lot of digits. It just has the digits. So it all appears to be positive, positive values, the value of a house, the value of a car, the value of a business, the value of your bank account, the value of your investments. They all appear to be positive values, but in reality, they're negative values because they're all in debt. And they have been used as collateral to basically as collateral for the bankruptcy of the entire world board, Monopoly board, that was made bankrupt in 1933. And it's because of that bankruptcy of the entire board that everything being a debt or within a debt-based system on the Monopoly board that enables the creditors, which the original creditors, the bloodline banker families that set up the bankruptcy of the United States originally, and then that spread worldwide. They get to control the game of commerce because the creditors have employed the United States Treasury as the bankruptcy trustee to control the debtors. And the debtors are all the citizens, straw men, birth certificate constructs, all the companies, all the governments. Everything on that board is artificial and in debt to the creditors that originally set up the bankruptcy of the United States in 1933. And that is what keeps the whole board under control. It's the control of the debt-based money system, which isn't really money as a lot of people would perceive it to be, because there isn't really any money of substance. It's just ledgers, and they're all debt ledgers on the board. So everything's a negative debt ledger. Look at the world debt clock. It's a debt. It's not a positive. Debt isn't a positive. It's a negative. And everybody's playing a debt game. Whether they think that they think they've paid off their mortgage or their credit card, their loan, and they might be sitting there with digits in the bank account, in the investment account, but they're all debt. Everybody's using debt to play the game, which is a curse because it's debt that keeps everybody under control. But it is actually a blessing as well, because if you know how to play the debt game, how to play the tax game, because it's really all about taxes, then you can prosper. And that's, I think, what we're going to talk about a bit today. So, but you've got to understand the landscape. And the landscape's not what it appears. There's no money of substance. Everything's a debt. Everything that's going on is artificial on this monopoly board, but the living men and women are dragged into it as the agent for the birth certificate construct. And I think if we start there, and then everything else sort of builds up from there, it starts to make sense why the monopoly game changer 3 core components have been put together to work together to enable the player, which is the living soul, to play the game of Monopoly at an advanced level that will enable you to play it with a different set of rules to everybody else who's playing it. Because everybody else on the Monopoly board is playing the game of using their labor, exchanging their labor for a wage or for a profit or something, their labor, their skill, they're exchanging that to try and get ahead. Whereas the best way to play Monopoly is, if you've already been playing for a while, is to redirect taxes that belong to you and use those in a perpetual loop of playing the game and redirecting the taxes that belong to you, playing the game which generates more tax redirection, and just basically playing it without having to put more and more energy onto the board. It's human energy, human labor, which is what they have basically taken a mortgage out over. So those that run the board as the creditors and the controllers, they have harnessed the energy of the people on this artificial monopoly board, which I call a modern slavery system, because they are basically have enslaved the whole planet without the whole planet and very few people on the planet actually realizing the nature of the slave game that is the monopoly, the game of Monopoly. And some people think that they're ahead of the game because they appear to be doing well. But the reality is that you don't own anything on this artificial monopoly board. You can't own anything because everything that's got substance value has already been mortgaged to those that created the bankruptcy. So you only get to use everything on the monopoly board. You get to use your car, but you don't own it. You get to use your house. You don't own that either. You get to use your business, but you don't own it. You don't own anything. In fact, you just get to use things. And because you're using everything on the monopoly board that belongs to the creditors, the original creditors, because they took a mortgage out over the entire monopoly board, they charge rent for you using their stuff. And that rent is called tax. And that's really what taxes are. It's the rent payments for using the collateral that is on the monopoly board that doesn't belong to anybody other than the creditors on the monopoly board. So there's two big illusions going on. One is that it appears real and people look like they can get quite prosperous. And the other illusion is that people think they own things and they own absolutely nothing. But what you can do is you can redirect taxes which have been abandoned, and you can buy real stuff and you can hold real stuff in such a way where you can control it and use it without having to pay taxes on it. And that's part of what the monopoly game change is about. So it's just playing the game the way the game is being laid up with advanced player strategy that hardly anybody knows about. Everybody's playing it a different way and using their energy, their labor and their skill and their endeavors and their creativity to try and get more and more, more and more digits, if you like, because it's all a digital system, without realizing that they've already got a fortune of redirected taxes abandoned that they could be pulling down every year, but they don't know about it because they're not supposed to know. Because if everybody knew, they wouldn't play the game the way that they do. No. And then the game probably, if everybody was doing what we're going to talk about on the Monopoly Game Changer, if everybody did it, which would be impossible, but if everybody did, the game would have to change, because it wouldn't work if everybody was doing it. So there's an opportunity for those, and there's a guy called Mandel House who brought out. He was very Woodrow Wilson. He was very close advisor to Woodrow Wilson, one of the early presidents of the United States. And when they brought this system in, well, they kind of accelerated bringing it in. Woodrow Wilson was having a chat with Mandel House one day, and Mandel House said, well, we can bring this system in, and it's only going to be 1 in a million that will ever figure it out. So if you want to be one of the 1 in a millions that's figured it out, stick around, because you might learn a bit more about it.
Absolutely. Well, let's talk a little bit about that, because I know you mentioned a moment ago that there's no money of substance anymore. You said that money's not real, and you mentioned that everything's inverted, everything's sort of debt based. So part of your research, you refer to a massive shift that happened in 1933. June 5th, 1933 was something called House Joint Resolution 192. And that's just one of the sort of the documentation, the historical documents that we refer to. In simple terms, how did this change our monetary system? You know, from money being backed by physical gold to a system that is literally just built around debt and IOUs.
Well, it's all about the bankers, the bloodline banking families wanted more control. And in order for them to get more control, they had to bring a system in that would enable the bankers as the creditors. They weren't creditors to begin with, but they became creditors to this bankrupt monopoly board, which is a worldwide trust. And in order for them to get that creditor status, they had to make the United States, which was the and still is today, you know, holding the world reserve currency. So the United States being the dominant in the world of the finance system, the United States dollar is has the majority of the trade going through it, and they have the reserve currency, and it's all dollar based. So they had to make the United States bankrupt, the banking families, and they did that by heating up the economy in the 1920s. So there was massive prosperity in the 1920s. Everyone was having a party. A lot of people were taking credit to buy shares, what's called buying shares on margin. People were, on paper, they thought they were millionaires, you know, back in those days, having a very good time with it. Well, then, of course, you had the stock market crash of the early 1930s, which was the biggest stock market crash in history. And that created a massive depression. Deliberately, it was an engineered depression, a bit like the 2008 engineered alleged credit crisis, which is subject for a different day. But that enabled the bankers to bail out the government being a corporate entity, the United States government, and the bankers could bail it out, but only if it was made bankrupt. And that's what happened. It started in March of 1933, and it's actually written up into the statute book on June 5th, in a permanent bankruptcy, not a temporary bankruptcy, permanent bankruptcy. So House Joint Resolution 192 is as in force today as it was in June of 1933. It's got the same force behind it. It's never going to go away because they can't get out of bankruptcy. So when the politicians are talking about they're going to reduce the deficit, you know, their country's got a big debt, they're going to reduce it. Well, it's actually impossible to do it because the whole system is based on debt. Debt can only expand. It can never contract because everything is a debt. And there's no way of paying anything because there's no money of substance to pay it with. you can only discharge one debt with another one. One IOU, one promise to pay in the future, to discharge an existing IOU, which are all book entries. They're all ledger entries on this great big worldwide trust monopoly board game, which is nothing. It doesn't work anywhere near like what most people perceive it to work. You know, they think that there is something backing the money. They think that banks lend money. They think that, you know, countries lend money to each other. And when you ask the question, so if there's $400 trillion of world debt, which is what the IMF say, who's it owed to? And of course, the answer is it's owed back to the people, because the people have exchanged their energy for currency, and that's what's backing the money supply. It's energy, and that's where the slavery bit comes in. So the monopoly board bankruptcy was deliberately put there to enable the bankers to expand the money. The money in circulation goes up and up every moment of every day, which is debt, and the debt controls the world population. So it's a very elegant game for the bankers, being the original creditors. They get to control the monopoly board, as the Rothschilds would, you know, said years ago. If they controlled the money, they don't care who's in office, in the, you know, who the politicians are. They come and go every few years, doesn't make any difference. He who controls the money controls the board. And that's the same today as it was when the guy said it. I think it's Baron de Rothschild said it, but over 100 years ago. So if they control the money system, they can control the world population, and that's what this whole monopoly game's about. It's about control of those that play a pieces, which are the citizens who think that they are the citizen, but they're not, because they are the agent for the citizen. But they keep holding themselves out as if they were the citizen. What's your name? Oh, my name's Smith, Jones, Brown. Well, your name isn't that, because that's the name of the birth certificate construct. You're a living soul. You're not the birth certificate construct. So they trick you into believing you are the birth certificate construct. They trick you to believe that there is money of substance. They trick you to believe that the banks are lending money. They trick you to believe that taxing is a good thing, because taxes finance the good works of the country and the defense budgets and the schools and the hospitals and all this stuff. And many people would march, you know, about, you know, we don't want too much tax, but we've got to pay our taxes, because if we don't, we're delinquents, and we'll, you know, our country will, you know, will go bankrupt and nothing will work because we're not paying our taxes. Well, it's a complete nonsense, because the tax that people are paying is not the tax that they think they're paying. The tax on their income is not actually a tax. It's a rent for using the stuff on the monopoly board. The biggest tax is the use of the energy. That's the big tax that everyone's paying, that they don't realize they're paying. But there is a way of redirecting it with the Monopoly Game Changer protocol.
Okay. So you mentioned there that there's no money, there's no real money. So if there's no real money of substance floating around, and I get it, you know, and maybe if you're watching this, just take out a £5 or a £10 note out your wallet and look at and read the small print, as they say. It'll say very clearly on there, I promise to pay the bearer the sum of £10. It's an IOU, it's a promise. So if that's the case, and we've got all of this money of account or money of form, not money of substance, floating around in the public economy, then what's actually powering every credit card swipe, every mortgage, every transaction on that board today?
Well, it's all promises. It's promising to pay in the future. You can't pay today because there's no money to pay it with. Money of substance doesn't exist. Money used to be backed by gold. And if you were paying something in the past, when the money was backed by gold, you could actually go and claim the gold, and then you could actually pay with a bit of paper that was backed by gold. Well, that's not been available to anybody for over 100 years. So what you're doing now is when you're paying for something, we all use the word pay, but it's actually impossible to pay. What you're actually doing is discharging. You are depositing a new security every time you make a bank payment. You're depositing a security when you go and get a mortgage, a loan, or a credit card. You're not borrowing anything from the bank. You're just depositing your energy, which is a promise to pay in the future. Just like it says on the banknote, promise to pay the bearer.
Yeah.
Well, the bearer is the holder of the note, and you're promising to pay the bearer. Well, you can't pay the bearer because there's nothing to pay from, because there's no money of substance. There's only money of account, which is basically debt ledgers. So all you can do is increase the debt by making a promise to pay in the future. And the banks will pretend that they're going to move your money from your account to another account, but actually all they're doing is crediting ledgers, digital ledger crediting, which is all debt moving around. And the banks are using your energy. They're taking your energy in as a deposit, and they're creating a matching liability on the other side of their balance sheet. So the debt, your promise is an asset to them. They create a matching liability on the other side of their balance sheet, and that debt is then stays in the system. And they like that debt because they can trade that debt in what's called securitization. And that's really what banking is about. It's about securitizing the debt, the interest on the debt. And that's the nature of, certainly the investment banking model is all about the trading of securitized debt.
Okay. So, and I know we've dug into this in a lot more detail in the past. So for the sake of the audience and just understanding the landscape before we dig into the protocols, if you do want to learn more about this, then we've got more in-depth conversations where Ian and I have covered the monetary system side of things in a lot more detail. But hopefully things are starting the fog is starting to lift. I really hope that is. It was difficult for me to get my head around this when I first learned. You know, the first time that I had conversations with you and sort of read your material and listened to your content, Ian, I got quite angry, to be honest with you. It pissed me off, I'm not going to lie, because I just felt like I'd been hoodwinked all my life, because I was that person who thought that money had value and that you trade your time for money, and that the only way that you could maybe apply leverage to that was by being a business owner. So I became a business owner and I ran a business and I had people that were working for me. And I thought, okay, this is better because I'm not doing all the work myself. I've got some leverage here. But in essence, everything around me, I felt I owned my house, my car, all the things that you've spoken about. And then to hear that all of that is inverted was a real shock to the system for me. But I think one thing I can say is the more that I've looked into this, the more sense it makes. So if you're sitting there thinking something's off, I can't quite put my finger on it, but there's something that doesn't make sense about this weird and wacky world that we live in. And I don't know what it is. So we put our heads down and we carry on and we go to work and we do the things that we know how to do because that's life. Well, I'm hoping this is going to make some sense to you. So we've given you a brief overview of the Monopoly board landscape, but what we want to do now is really dig into the Monopoly game changer. And that consists of 3 specific protocols. We're going to talk about how you can change your role, how you can build a private vault to protect your wealth and your assets. And then importantly, the Kickstarter to all of this is reclaiming your signature value, the taxes paid on the value of that signature, right back to the age of 18. So let's dig into that section as well now. So we're going to talk about, first of all, changing your role. And this is the first segment of the Monopoly Game Changer, which is called the Envoy Protocol. You know, again, I'm trying to think of this in layman terms, Ian. I'm trying to think of this if someone's never seen any of your content before. Most of us, and I was that guy, walk around believing that we are the name printed on the driver's license, on your ID card, on your passport. Why is that such a fundamental mix-up?
Well, it's a trick and it's a trap, because what they've done is they've got your mum and dad to register this entity, a birth certificate construct entity, which is actually a decedent estate, meaning it's a dead estate, because they register the placenta and the placenta dies, and therefore the citizen, which at that time of registration can't play the game of Monopoly because they're not old enough. They don't have the credentials yet, but they will have going forward. So when you wind the clock forward after the birth certificate registration, now you've got this artificial construct like a company. It's been registered onto the Monopoly board, but you can't use it until you come of age. When you come of age, which is 18, 21, depending on the system and the country you're in, now you can start to use that player piece. But nobody tells you it's not you. You think it's you because, you know, all the way through, you've probably been asked your name. What's your name? You know, at school, what's your name? Sign the register. What's your name? You go and get a car. You need a driving license. So the form you fill in, it asks you what's your name. You put down the name of the birth certificate construct. So you know, in order to play on the Monopoly board, you start to hold yourself out as if you were that name on the birth certificate itself. But of course, look at the birth certificate. It actually says on the majority of them, do not use this as a form of identity. It's kind of a game. It's a bit of a giveaway, yeah, because it's not you. Don't confirm that you are this birth certificate name, because you're not. You are the agent for the birth certificate. It's the birth certificate construct, and as the agent, you can use it because you represent it. You're the agent for it. You can use it, but you can't say you are it without holding yourself out in an impersonation fraud, which of course is what they want you to do. Because if you are always holding yourself out, impersonating the birth certificate construct, now you've lost all your rights, because you are holding out. It's called holding out in the legal system. You're holding out, impersonating this birth certificate construct, which is actually registered to the state, but you keep saying it's you, and of course it isn't you. So that takes away all of your rights. You become what's known as the executor de son tort, because it's a decedent estate, and the living soul, the living man, woman, is regarded and presumed to be the executor de son tort, the executor of all the wrongs. But all the wrongs are the use of the birth certificate name as if it were you. You're always in the wrong because it's not you. And that's how they trap you, take away your rights. And they don't actually prosecute you for it. They just don't give you any rights. They give you privileges to play on the Monopoly board,
which are all taxable.
They don't write to you and say, hey, stop using that name because it belongs to us, because they want you to use it, because they want you to operate on the Monopoly board with no rights whatsoever as a pauper. So not only do you own nothing on this Monopoly board, but you don't have any rights on the Monopoly board either, because you are permanently and perpetually operating as the executor de son tort, the executor of all the wrongs, operating in fraud without knowing it, but without being prosecuted for it, because that would give the game away. If the state prosecuted everybody who used the name, it would definitely give the game away. They don't want that. They silently take away your rights by getting you to believe that the birth certificate is you. The birth certificate name can be used for all sorts of purposes. And whilst there's this illusion of wealth go and get a job, go and get a business, go and do something to make a profit, buy this, that, and the other, and rest easy that you've built your wealth. Yeah. So you don't fight the state because you think you're quite wealthy, but actually you've got nothing because you're a pauper and you're an executor de son tour. You're actually a fraudster without realizing it. That's the reality of the nature of the player piece. The player has become a fraudster because he uses the player piece as if the player piece was him or her.
It's quite shocking, really, when I think I'm just trying to think of this from somebody hearing this for the very first time, like when I heard it. So if that's the case, the fix to this is the envoy protocol, because, or certainly that's part of the fix, because instead of sort of fighting the legal system or arguing with the banks over this, that, and the other, how does this protocol, the envoy protocol, let you step into the role of the true general executor, not executor de son tour, but the true general executor, essentially becoming the rightful manager of that playing piece rather than its servant, shall we say?
Yes, it's done through basically it's done through declaration. So you come clean. You say, look, on a declaration which is sent to head honchos of the state, you come clean. You say, look, I didn't realize that using the name of the birth certificate was I didn't realize I was operating as the executive de son tour. So I'm now not going to use the name of the birth certificate anymore as if it were me. I'm going to make it clear that I am the agent for it. I am not it. And by making that declaration, and what's called occupying the office of the decedent estate of the person, that's the birth certificate construct. Every artificial entity has an office, like the office of the prime minister, the office of the president. Every title and a Mr. or a Mrs. is a title, a doctor, or a physician, what you name it, a scientist. These are all titles. A teacher. These are all titles. Well, Mr. Mrs. is a title. And every title has an office. So the birth certificate construct, the citizen, has an office. Well, at the moment, that office is occupied by the living man, woman as the executor de son tour. But what you're going to do is you're going to serve a notice and make a declaration that you're going to now be occupying the office of the decedent estate, the citizen, as the general executor, occupying the office of the general executor over the decedent estate, which cleans up the basically it's and there's something called clausula rebus sextantibus, which is a declaration that you can say, look, I didn't realize that I was the executive de son tour. I'm not going to operate like that anymore. I'm going to make it clear that I am the agent for this birth certificate construct, and I'm going to basically wipe the slate clean because I didn't realize that I was committing a fraud by using the name as if it was me. I'm now going to clean that up, and it's done through a declaration. So, and the other part of the declaration is you're going to declare that you are alive because they presume that you're dead under the Sesquivay V Act of 1666. The state presumes that you're dead and lost across the seas because you never declared that you were alive. So you do two things. You occupy the office of the decedent estate as the general executor. You declare that you are alive, and now whenever you are playing the game of Monopoly, you can play the game as the player, but the player piece is you are the agent for it still, but you've separated the name fraud. You don't say I am that player piece. You can put general executor, or you can put underneath the name, you can put down agent, or you can put down agent for, or you can put down you can put down general executor for, and that separates, and it then removes that executive de son tour label or that problem and replaces it with the lawful agency of the birth certificate construct.
Gotcha. Okay. So moving forwards then, that's the envoy protocol, making that declaration, changing that status to become to be holding the position of the office of the general executor. So getting rid of the wrongs and just saying, hey, I'm not operating like this anymore. Didn't realize I was doing it in the first place, and just getting that slate nice and clean moving forwards. The next part of this is what we call the asset fortress. So I want to dig into that as well, because you mentioned that when people, build so-called wealth, acquire properties, assets, whatever it is that they have, that on the current monopoly board, none of it belongs to them anyway. So let's talk a little bit about that. Once someone corrects their role on this board, they then set up what's called the Asset Fortress Protocol. Can you explain what this private international trust is and how it acts? I think you mentioned it like a personal castle to protect your wealth. So just expand on that.
Well, I call it the asset fortress because it is like a fortress for your wealth, and it's actually created. It can sit on the artificial monopoly board as another player piece, and that player piece operates as basically as its own nation. It's separate from any other nation. It has its own identity, and it is separate from the birth certificate construct, which enables a lot of opportunity to play the game of Monopoly, but now play it through the Asset Fortress Protocol as a player piece, but without the liabilities of the citizen, because it's not registered to the state in the same way as the birth certificate construct is. So you can now play the game of Monopoly, and you can use the Asset Fortress Protocol as an artificial construct on Monopoly board, which is artificial, as we established earlier, but without the liabilities that attach to the citizen or the straw man as another player piece. You don't have to get rid of the straw man or the citizen. You can keep the straw man, citizen, birth certificate construct. No, don't have to change that, but you can now play the game of Monopoly through the Asset Fortress Protocol, which enables you to record your assets or register assets to it privately and get a bank account, which is critically important, because what you want to be doing is spending from the Asset Fortress Protocol, the private treasury, without having all your banking transactions, tracked and traced under the microscope of Big Brother, who's going to tell you what you can buy and tell you how much of it you can have each week or each month, which is something that's going to happen going forward across the whole world. You'll be constrained on what you can spend through the citizenship bank accounts, but not through the Asset Fortress, because it's a foreign grantor's trust, meaning that it's foreign to the United States, and the United States is where the bankruptcy originated. So it's foreign from it. It's separate from the United States system. It stands on its own with its own identity, and it doesn't have to comply with legislation in the country that you may be operating from. So it can sit internationally as and play the game without having to record, without having to pay taxes, without having to disclose details about what it owns, what it's doing. It's private. It's a way of going private and avoiding the control system, and using it for everyday expenses, everyday life, in the same way as you would a bank account with the citizenship bank account. Same thing, bank card, bank transfers, nothing different really. just
Okay.
giving you more control and more privacy.
Amazing. So if you've got this asset fortress in place and you've got a private bank account attached to that, and I know what that's like, and if you're watching this, I'm sure you can relate. If you want to go and draw some money out the bank these days, it's like 20 questions. It really is. They want to know your blood type and everything. Not only do they want to know about you, but they want to know what you're going to use the money for. And I'm sitting there thinking, it's none of your business what I'm using it for. It's my money. But that is how things are going. This control grid is really, really squeezing in these days. So imagine having the ability to move assets, move huge amounts of wealth through a private bank account and never be questioned on what you're using it for, why you're using it, who's it for, when do you want it. Just to have that privacy there for you and your family. That is exactly what the asset fortress will do for you. You can use that for day-to-day living, but also as a whole, just to protect the assets and the generational wealth that you want to build for you and your family. Now to the cherry on top. This is the bit that I love the most, because you might be sitting there thinking, well, it's all well and good me changing my status, becoming an envoy, having this envoy protocol and making these declarations. And I totally agree that I want to do that. I don't want to be operating in fraud. And I love the idea of a private bank account, but I've nothing to put in it. I've no assets. I've been working hard all my life, barely making ends meet on that hamster wheel. Sound familiar? Well, there is a way where you can kickstart this whole process. And now all of a sudden, the envoy protocol, the asset protocol, as Ian said, all start to make perfect sense as to why you would need them in the first place. Because now what we're going to talk about is this. We're going to talk about how you can actually reclaim that signature value. The currency creation protocol, backed by what is called the Clifford Protocol, which has empirical evidence and proof that every step of that protocol works and is validated. This is, like I said, the cherry on the top when it comes to changing the game of Monopoly. So let's talk a little bit about this, Ian. Let's talk about the economic engine, okay? The currency creation protocol. You talk in your reports, in multiple reports, you cite banking experts like Richard Werner. You even cite what the Bank of England themselves have admitted, that banks create credit out of thin air, literally, something called ex nihilo credit. At the exact moment that you sign a loan, credit card agreement, whatever it may be. How does the system then treat that value if the person who signed for it just stays silent and doesn't know any different?
Well, the one of the reasons why they set this birth certificate construct system up was to securitize the energy of all the people. So to back the bankruptcy of the entire monopoly board system, the creditors, that's the original bloodline banking families, bailed out the United States government and took a lien or a charge over everything in the world, all the land, all the infrastructure, all the property, and crucially, importantly, over the birth certificate constructs themselves, which were all made into securities, and all of the future value of those, that the labor of the energy of the people could then be securitized. And crucially, of crucial importance, this securitization of the birth certificate doesn't belong to the living man, woman as the agent. No, it belongs to the board. It belongs to the creditors on the board, the original creditors on the board. So people who believe that you can cash in your birth certificate don't understand how the nature of this worldwide bankruptcy works. The securitization of the birth certificate is an asset that is mortgaged to the original creditors. So you can't cash it in. You have no rights to cash it in. But what in parallel is going on? The birth certificate construct becomes, when it becomes of age, 18, 21, it becomes a banker under the Bills of Exchange Act, where it's confirmed 1882. So now you've got this, you're the agent for a banker. The banker is the birth certificate construct, and the banker issues promises to pay in the future. Those promises to pay are like deposits of energy. So if you go to a bank and you say, I want to open a bank account, or I want to get a mortgage or a loan or a credit card, they will go through their normal, checks and balances and say, oh yeah, you qualify, fantastic, let's open you an account. If it's a mortgage, for example, they'll say, sign all these forms, you'll sign all the forms, and you will be promising to pay the bank back the face value of the mortgage plus interest. And that promise to pay the bank back, simultaneously, when you make that promise, the bank takes the promise as an asset to them. And then on the other side of their balance sheet, create an equal liability to the promise. So that if it's $1 million mortgage, you promise to pay $1 million plus interest to the bank. They can create a debt for $1 million on their balance sheet, on the other side of their balance sheet, and that's the mortgage. They didn't have $1 million to lend you. You deposited your energy with them. They created the million ex nihilo, which is what Professor Richard Werner talks about. It's what the Bank of England talks about. It's what the Federal Reserve talk about in various papers that have been published over the years. And that debt now of $1 million in this example now stays on the monopoly board. And because it's got an interest, it's entitled to collect interest. Yeah, because that's the deal. The mortgage comes at interest.
Yeah.
So the interest makes that mortgage face value of $1 million much more valuable in the banking world. They can trade that $1 million debt because it's got interest attached to it. It's worth multiples of 1 million, and they can sell it to investment banks who trade debt securities, which is what all of the securities are. They're all debt securities, and they can use them, what's called hypothecation. They can expand and make more from those securities, and they pay taxes because the banks, believe it or not, are debtors. They're like every other artificial construct on the monopoly board. They're all debtors. So they have to, if they're using your energy, and by the way, you as a living soul, man, woman, are one of the creditors. They're using the creditor's energy within these securitizations that they trade. And because they're using the credit energy, they have to pay tax to the bankruptcy trustee for the use of the credit energy, which is all of the people's energy. And those taxes that they pay belong to the creditors, which in the case of this mortgage, if you sign for $1 million mortgage, that $1 million mortgage, the taxes that the banks are paying to use that $1 million of energy, the taxes they pay on that belong back to the creditor, which is the living soul. And that is what we call signature value or signature credit recoupment. It is the equivalent of the face value of the promise to pay that can come back as a tax redirection, because the taxes to use the energy don't belong to the United States Treasury. They definitely don't belong to the banks, because the banks are paying taxes to use the credit energy. They only can belong to the creditor who created the energy in the first place, created the $1 million mortgage. That is the living soul. And the currency creation protocol is with a lot of financial engineering, enables that redirection of taxes to come back into ultimately the asset fortress protocol as a tax redirection, equivalent to the value of the mortgage. In this case, $1 million would be $1 million of tax redirection that will end up in the asset fortress protocol.
And you talk about being able to go back to the age of majority, whether that be 18 or 21 as well. So for somebody who's been on the board, playing the game piece on the board for a number of years, like myself, I'm 56 going on 57 now. That's, 30, 36, 37 years, 38 years, whatever it may be of my life, where I've been putting out these promises to pay. That's a lot of potential tax that's owed back to me as an individual living man. So this is what we're talking about, guys, as the real Kickstarter to being able to create financial stability for yourself and your family. But there is a cap on this, isn't there, Ian? I don't want to go into too much detail when it comes to the cap, but I think it's important for people to understand that there are limitations to what can and cannot be achieved on these taxes. We won't go into the depths of why there are those limitations, but just to set the right expectations for people who are thinking that they can suddenly recoup hundreds of millions of pounds or dollars. Maybe you could just briefly mention the cap. And then also, I'd love for you to just talk about this concept that you mentioned in your documentation about the infinity loop as well. How does spending money out of the private trust, out of the asset fortress account, actually turn into a way where you can recycle and recoup those funds each year moving forwards, which I think will then make a lot more sense when it comes to the cap.
Well, there isn't really there's no limitations on how much tax you can redirect, but there is within the United States Treasury system, they have a system of algorithms that check everything. And if you don't want your signature credit to be held up by a manual review, then there is a $2 million cap that you can sail underneath that $2 million level without going into a manual review, which could delay the signature credit tax redirection. So, I advocate members only trying to redirect up to 2 million a year, which, quite frankly, as we discussed before, should be plenty enough. And it's per grantor. So the birth certificate construct is the grantor of this international trust that is going to be redirecting the taxes to it. It's part of the engineering of the whole process. Can redirect $2 million dollars a year. So if you're married, it's $4 million. You and your wife, or you and your husband, you can have $4 million a year without triggering a manual review of the tax redirection, which I think is, plenty for any family, I would have thought. And that is every year. So what's happening here is that you can, let's say you redirect $2 million in year one, and you've got it in your asset fortress protocol, and your bank account that's connected to the asset fortress protocol, you then spend 2 million in that first year. That puts signature credit back onto the board, which would generate a tax redirection for the next year. So then you recoup that or redirect the taxes the next year, spend 2 million, redirect the next year. So 2 million is not the limit. It's 2 million per tax year per grantor, which is per birth certificate construct, if you like. So if you're in your middle years, you may have, comfortably 50 years to go, $2 million a year, you've got 100 million of taxes that you could redirect, moving forward. And that should be enough for anybody, I would have thought, to finance their lifestyle. And the 2 million cap will probably go up as inflation erodes the value of it away. So that's what you can do. Once you start, you're not just recouping or redirecting 2 million or 1 million if you haven't got 2 million to redirect. You are setting up a program that you're going to be able to repeat year in, year out going forward. So that rather than going out to work for your income, you can redirect taxes that you've already abandoned, because these taxes that you're redirecting are abandoned. They're unclaimed tax redirections that everybody's got who's over the age of 18, 21, without realizing that they've abandoned all of this tax that the investment banks have paid to the United States Treasury. And because it's never been claimed, it just gets abandoned. And that's what's going on.
I think if people realize that it's just sitting there, then why would you not want to do that, guys? So let's talk a little bit now about how you can get started. And I hope this makes sense. So you've got your envoy protocol, changing that status, becoming the taking control of the office of the general executor, and just correcting those wrongs. Then you've got the ring fence, the asset fortress, just protecting everything, getting everything set up, the mechanics of that trust and that bank account set up, ready to then receive the taxes that are sitting there at the US Treasury, waiting for you to reclaim, but nobody knows how to do it. Nobody's even thought about it. Nobody knows it exists, or very few, the 1 in a million, as you called it, Ian, earlier. So if this is making sense for you and you're sick of being on that hamster wheel and you really do want to get started with this, then there is a pathway where you can join, and potentially for zero upfront cost. I want to talk a little bit about that and the webinar reward scheme. If you're new to us here at the Republic of Old Souls, we run a flagship webinar every Saturday. We've got a webinar coming up. It's now Thursday, the 28th of May that we're recording this. So we'll have another webinar this Saturday on the 30th of May. We run them at the same time every Saturday morning, 10 a.m. UK time. We'd love to see you there. In fact, this Saturday, Ian is going to be discussing a very, very poignant subject that is very much connected with what we're talking about today, which is why signature credit recoupment is only possible via a foreign grantor trust. If you went online right now and you started Googling how to do this, how to do 1099 OID recoupments, or how to file 1099 OIDs, excuse me, you'll find a lot of scary information that will come up on page 1 about how it's not legal, it'll get you in trouble, it could put you in prison, the IRS will send you huge frivolous file penalties, and everything in between. But the missing piece is what Ian's going to talk about on Saturday. Ian's figured it out through the Clifford Protocol, front to back. So I would encourage you to join us there, because if you really want to understand the full breakdown of why this works, how it works, why it works, so that you can make a decision about getting started, Saturday would be a great place for you to join us. So let's talk a little bit about this then. For anyone listening who wants to kind of make this transition in, but maybe they're worried about the cost, because cost of living is a real thing. People are struggling, aren't they? We operate here as a ministry, don't we, called the Republic of Old Souls. Why do you say that setting this up ultimately results in no cost to the member?
Well, because everything, the donation to get started is then, it becomes a tax redirection in the first redirection. It includes the donation. So if you're basically getting back what you are donating, plus a lot more, of course, because whatever the donation is, you're gonna get back, massively more than that in your first tax redirection. So it's more of a cash flow exercise, rather than a cost. If you imagine that if you wanted to buy a brand new car, and the brand new car was $50,000, and you went to the garage and said, I really want to buy that car, what's your deal, what's your financing deal? And they said, well, I'll tell you what, pay us today, and within a year we'll give you your money back and you get to keep the car. Do you think you'd buy that car if you had the ability to do that?
Yeah,
I think you would. Yeah. So that's what we're really saying here. And to make it even more affordable, because I totally understand that there's a lot of stress out there on this monopoly board, this debt-based monopoly board. We provide a sliding scale of donation. You can pay the standard, or you can donate the standard amount, and we take a contribution or a donation on the back end. That's the recoupment, the tax redirection, which you get back. Or you can reduce the donation right down to a very minimal amount, and that increases the amount of donation on the signature credit or the tax redirection. You get it all back, so you don't lose anything. It's just that we get more cash flow on the back end, which you then recoup, so you don't lose it. And if you really are struggling and you want to reduce the cost even further, or you just want to reduce the cost anyway, is you can refer people to my avatar, the Ian Clifford avatar, which is going live right now, actually, for our advocates to use. So you can send that out to people, and if the people you send it to use it for more than 10 minutes, you get $100 of credit, which you can set off against the Monopoly Game Changer donation. Or if you get people to come to my Saturday webinars, you also get $100. I think it's going to be popular to use the avatar to get your rewards points, or you can set those reward points against any other protocol that we bring to the market or into our membership going forward.
So there's an option here for pretty much everybody, isn't there? People who feel that they can afford to move forwards can do so, and they can make just the standard donation. If you're really struggling, you've got the opportunity to reduce that front end donation. We increase the back end fee against the actual recoupment itself, but because that is a recoupment amount that is paid out of your Asset Fortress protocol, you get to recoup that back as well. So you don't lose it in any way, shape, or form. That comes back to you anyway. Lots of options there. I would say moving forwards, let's talk about call to action, Ian. Because if I was new to this and it started making sense to me, like I remember it did, I remember my wife and we moved pretty sharp on this, because I felt like I'd lost 30 years. That's how it felt to me. So we moved quickly, and I'm glad that we did. So I would say to anybody that's watching this who is not getting involved, then your next steps really, really need to be, number one, get yourself registered for Saturday's webinar. If you're brand new and you want to expand on what we've spoken about today, register for the Saturday webinar. You can do that here. It's roswebinars.is. Go there, register for the webinar, join us Saturday morning, learn more about why signature credit recoupment is possible, but only possible via that foreign grantor trust that Ian speaks about. That's that part of the Asset Fortress. So that would be the first thing. If you're already a member and you're going through the process, then congratulations, welcome to the family. But also, I would say, clearly this must benefit other people that you know. So if you are wanting to spread the word, if you're wanting to help us continue to build out the Republic of Old Souls Nation, then use your unique referral links and refer other people to come and join us on the webinar, or the referral links that will be going live for our advocates for the Ian Clifford avatar. And people can engage directly with the avatar. I had a go with it yesterday. I think it's fantastic. You don't even need to type in your questions. You can literally just sit there and speak to the avatar. So I was asking Ian questions as if it was Ian on screen. Ian was answering me, asking me where I wanted to go from there. And I had a good 10, 15-minute conversation. And I think that people are going to love it. I think it's very informative, gives people the resources and the answers that they're looking for. So if you're an advocate here, the avatar is going to be incredibly powerful for you to be able to give that link out to someone who knows nothing about this, and they can literally just sit down in the comfort of their own home, grab a cup of tea, and have a chat with Ian about the protocols. and get the answers that they're looking for, but also understand how they can participate and move forwards with that. So that would be my call to action. Register for the webinar. If you're a new person, if you're an existing member, register and spread the word, because we want to continue to help as many people as we possibly can break free from this horrible hamster wheel that people find themselves on. So that's my final thoughts, Ian. What about yours before we let people go?
Well, my final thoughts are that if you want to know why this works, why all these things work we've been talking about, go to Ecclesia Law Institute if you want to read about it, or go and get access to the avatar. Come to my webinars. I break it all down. We've got things that are written, which is on Ecclesia Law Institute. You can come into the webinars where I'm obviously talking about things and breaking them down. We get very good feedback on the webinars. Andy and I do interviews, breaking things down. We've done many of them. We'll continue to do that. All the questions that come in, we do questions and answers every week. So there's plenty of material. Or get the avatar and start using that. And if you feel that you want to proceed, then book in with one of our consultants, and they will help you calculate the amount that you could put into your tax redirection, which is your signature credit recoupment. They can help you calculate the amount and identify which banks did you use, how much did you deposit with them, and how to get started with all three: the Envoy, the Asset Fortress, and the currency creation, all in a bundle. And they can show you what is the sweet spot for you in terms of the donation to get you off the ground. And then if you become an advocate and you want to spread the word, you will be able to earn a share of all of the new people that join as a result of your referral. So you can create a passive income stream just by sharing that Ian Clifford avatar out. And I think more and more people will, not only will they be receiving the signature credit recoupment every year, but they'll be receiving a passive income stream by making those referrals, which is easy to do. Just send people the avatar link, and that's all you need to do. Then sit back and we do the rest.
Fantastic. Well, guys, appreciate you all joining us. I hope you've enjoyed it today as much as I have. We look forward to seeing you on the webinars at the weekend, 10 a.m. every Saturday morning UK time. But for now, have a fantastic day. And Ian and I will no doubt see you on the next episode. Bye for now.